What if I told you that the next stock market crash could be closer than most investors think? With AI stocks soaring, record market valuations, and growing economic uncertainty, many investors are asking one question: is a stock market crash coming in 2027? In this video, we'll break down the biggest warning signs, what history tells us, and what could happen to your investments if a major market downturn occurs. Welcome back to the channel. If you enjoy stock market analysis, investing insights, and financial education, make sure to subscribe and hit the notification bell. Let's dive into the evidence behind the growing 2027 crash predictions. Why investors are worried? The first reason investors are concerned is valuation. Many technology and AI-related stocks have experienced explosive growth over the last few years. Companies like NVIDIA, Meta, and Broadcom have delivered incredible returns. But when stock prices rise faster than company earnings, valuations become stretched. Historically, periods of extreme optimism have often been followed by significant corrections. That's exactly what happened during the dot-com bubble of 2000. The AI bubble question: artificial intelligence is transforming industries worldwide. But some analysts believe investors may be getting too excited. The key question is, can AI profits grow fast enough to justify today's stock prices? If earnings fail to meet expectations, investors could begin selling high-growth technology stocks. And because AI companies now represent a large portion of the market, a decline could affect major indexes like the S&P 500 and Nasdaq. Another major concern is the economy. Several risks remain on the horizon: high government debt, slower economic growth, inflation concerns, geopolitical tensions. If economic growth weakens significantly, corporate earnings could decline. And when earnings fall, stock prices often follow. Historically, most major bear markets have occurred during or before recessions. But it's not all bad news. There are also strong reasons why the market could continue rising. Many large companies are generating record profits. Artificial intelligence could boost productivity and create entirely new industries. And if economic growth slows, central banks may lower interest rates to support the economy. These factors could help prevent a severe market crash. Let's look at history. The stock market has experienced major crashes before. 1929 crash, the dot-com crash, the 2008 financial crisis, and the 2020 pandemic crash. Each event felt catastrophic at the time. Yet over the long term, markets recovered and eventually reached new highs. That's why long-term investors often focus on staying invested rather than trying to predict every market move. So, is a stock market crash coming in 2027? The honest answer is nobody knows for sure. A normal correction of 10 to 20% is certainly possible. A larger bear market is also possible if economic conditions worsen. But predicting the exact timing of a crash has always been extremely difficult. The best strategy is to stay informed, manage risk, and invest with a long-term perspective. What do you think? Will the stock market crash in 2027, or will AI continue driving stocks higher? Leave your opinion in the comments below. Don't forget to like, subscribe, and share this video. Thanks for watching, and I'll see you in the next one.